One of my absolute favorite stocks for running the wheel strategy, SoFi, tumbled nearly 7% on our last trading day here yesterday. Here's how I'm playing it, and most importantly, why did SoFi drop so hard? And if you drop a comment down below on today's video, you're going to get my full 2026 options wheel strategy guide completely for free. Just drop a comment down below. I'll send that over to you. And while you're down there, hit that like button and that subscribe button. It really helps this channel grow more than you know. And of course, I hope you're having an absolutely God-blessed day, guys. But today, oh my gosh, SoFi getting absolutely beat up really for the past week and after a fantastic earning. So let's go ahead over the shoulder here, guys. And I want to kind of talk about this real briefly because you guys know I absolutely love SoFi. It has been my most traded wheel strategy stock really for all of 2025 and now even going into 2026. As a lot of you know, I do a lot of cash secured puts and covered calls, covered strangle, Peter Strangle, some of us like to call, on a weekly basis on SoFi. That way I'm dipping in on the cash secured puts and the covered calls. But there's some real lessons to be learned here, no matter how much you like a stock. So please bear with me. I think today's video is going to be very, very valuable to you guys. Okay. So first and foremost, right? Number one, why? Why is this happening? Well, number one, we got to talk about, first of all, their past earnings, right? They just had a massive, their first $1 billion in revenue quarter, up 39.6% year over year. And they added, right? They added 1 million users, right, in Q4 as well, right? However, we saw the stock drop a ton, like a rock really for the past week, and especially going into earnings week, right? We're actually just dipping below or really testing the 200-day moving average right now. We're trading at 2281, 200-day moving average at 2269. Are we going to dip below that and then work our way back to the 300-day moving average? We'll see, right? But we're going to talk about all that in just a moment, at least how I'm personally going to be playing SoFi here. But with that said, and I'm not going to read this all out to you guys. You can pause. This is all on arkpicks.com. These news, this whole entire news article that I put together specifically for option sellers and how this is done here. But huge milestone quarter, right? From CEO, and 2026 guidance was raised to $4.65 billion in revenue and 60 cents per share in adjusted earnings. That is huge. Now, the decline obviously pushed prices below that 200-day moving average just slightly and deep into oversold territories. RSI 29.5. Why? Lots of profit taking, it seems. Concerns over potential unemployment rises, delinquencies, and regulatory risks that proposed with the 10% credit card rates, which even is just slightly even with that being all true, to my mind immediately goes, members grew by 30%. Like, that is insane. And to have their first $1 billion quarter. So this is where my mind immediately goes. And go do your own research on SoFi. My mind goes immediately when a stock is plummeting like this, it goes immediately to have the fundamentals changed. To me, I confidently say, me personally, you have to go do your own research. No, it has not. Fundamentally, the company is stronger than ever before. And there's something to be said here, guys, because this is why I stress all of the time, do not let your options contracts expire during earnings week, okay? Do not, right? So for me, I had some puts that I deployed last week. I wanted to do them this Friday or next Friday, right? But I didn't. Instead, I pushed them out 3 weeks out. Did I want to do that? No, because I like doing covered calls and cash secured puts for the same expiration on a weekly basis for SoFi, because that's been treating me really well, right? I'm getting a decent return. I'm getting assigned. I'm getting in and out. Actually, I'm not getting assigned, like hardly ever. But with that said, let's say even if I was really confident, right, last week that SoFi was going to have a fantastic earnings, which I really strongly believe that they were. Look what happened here. Right? Amazing earnings, and the stock has still dropped, right? Let's say down 17% just over the last month. Over the last week here, down 12%. I would have taken assignment. Now, in the grand scheme of things, if I believe in a stock, am I upset that if I got assigned it? Not really. But here's the thing. What if you, right, last week, or let's just go out a month here, I'm just here on just like Earnings Hub, right? Just because this chart is a little bit simpler, right? It's trading, let's say around like January to, 14th, it's trading around like 2650-ish, right? And let's say you did some 25 puts expiring for this week on SoFi, right? You would have been assigned at 25 when the stock is only 22. That's not good, right? I think we can agree that's not really nice, right? Why? Not only obviously you may want the stock, sure, and it may recover, awesome, but now you're not even able to really get good covered call premiums in. So even if we go take a look at SoFi here, let's go quickly look on the options chain. We are after hours, obviously, but let's go just take a quick look. So let's say you did get assigned at 25 here this past week. I'll even go 34 days out. So hopefully we definitely are going to see something here. So yes, you at least are getting, sell a call and go up out to our 34 days. So at least you're able to get a little bit of something doing like 26s or 27s, but hardly enough. So for me, what I always stress is when you look at your premiums, right? When you look at that and you're researching your days to expiration, like here, for example, on arkpicks.com, I have just a trade idea for the 21 strike, right? 3.57 return on collateral, obviously not financial advice, results vary 100%. Go do your own research on this. We're locking up $2,100 of collateral till March 6th. But now I'm through right? I'm through earnings, right? Now, if this was earnings, right, I would want to verify, yes, that this is earnings day, the earnings week. That's why the returns are so elevated. So personally, how I'm playing SoFi is I'm getting back in. I'm not that I've ever left, right? Now, I opened up a bunch of positions just this past Friday. Right, I did some 2150s, I did some 22s, and I'm personally, to me, more all in on this stock now than ever before, and I'm going to continue to step my way down. So what do I mean when I say ladder step down? All right, so let me quickly just delete all this junk from here real quick. So here's how I do it. And this is my cash secured put calculator. If you want this, it's free at the end of the Ark Options Strategy workshop. The first link in the description of today's video. And you also get my full trade log template as well as my premium calculator. So watch that. It's a 90-minute training talking about the Ark Options Strategy, especially perfect if you are brand new to all of this whole selling options and wheel strategy thing. It is freaking so cool. You're going to love it. But with that said, let's go take a look at the options chain real quick. We're going to go to sell a put and we'll go out. Again, I usually like to be a little bit more shorter dated with SoFi so I get a little bit better return than if I do a monthly. That's just me. So a lot of my stuff actually I have going out to February 13th right now. So what am I looking at? I'm doing 2150s and I'm doing 22s. I wasn't really doing 21s, but I may consider doing those now in this week, especially if we continue to see SoFi drop. Again, technical wise, I love the setup. Right now, has it been on a crazy run? Sure. Is it justified? Yeah, honestly, in my opinion, the fundamentals and how strong the company is after this earnings, I think it is justified, and I think they're not slowing down. That's just my personal opinion. I'm not a financial advisor. I don't know anything I'm talking about. But for me personally, as a user of this company and how much I love their products, I personally am going more into this. So again, especially since now we have not dipped below a 200-day moving average or even gotten close to a 200-day average in quite a bit of time at this point. Really, since that drop that we saw across the board in April when it was trading at $9, obviously had that crazy run, a good healthy pullback is good. This is healthy, guys. This is healthy. This is where your conviction starts to get tested. Did you like SoFi to begin with or did you not? That you have to make those decisions for yourself. But this is how I ladder step my cash secured puts down. Right, so obviously, I can always go look at the deltas. I'm not too concerned with deltas. I'm more concerned with return on collateral. Return on collateral tells you what your true risk is, right? So when I look at the trade idea here, a 3.57 return on collateral on a monthly, right, that is high risk. That is a higher chance of actually being assigned. So you have to weigh those risks for yourself. But coming back over to the options chain here, right? So if I do the 22s, right, let's just see, we're collecting about $65 in premium, right? So I'll do $65 of premium I'm collecting. Obviously, this is not financial advice, just the returns I'm seeing on my screen at the time of me recording this video. But I'm locking up $2,200 to do that trade. That gives me nearly 3% return. But understand that I have a higher chance of actually getting my shares assigned here. Okay, you have to understand that there's no such thing as free premium. We are taking risk, right? Now, again, we're not day traders or anything like that, but still, you don't let anybody tell you it's free money. We're essentially insurance salesmen. So the way I do it is, let's say I do like one contract here, right? And then I will split it up. So instead of doing like 5 contracts all in on the 22s, that to me, I don't really like that. I like to kind of ladder step my way down. That way, if it really continues to plummet, I'm just, lowering my cost basis further. So like, for example, if I had like, $6,000 that I'm trying to, deploy around 6,000, I'll ladder step my way down for that expiration, even push them out to that expiration, push out a further expiration. But then let's say I'll do the 21 fives, right? So let's look at 21 fives. We're collecting, let's say, $46 of premium on this one, right? And then that was locking up a little bit less collateral, obviously, but we're also collecting less premium, right? But we're also getting still around a 2% return, right? Me personally, that's kind of the range I usually try to be in. It gives me a healthy balance of good actual return and then a good risk, right? So if we pop open this contract, let's see what that delta is. So it's under a 30 delta, which is usually where I like to be, between like a 0.25 or a 30 delta is kind of where I like to live. Now you can also scatter these out depending on how aggressive you want to be. Of course, you could scatter these out by going out further expirations. Now the catch is with further expirations, obviously time is more on your side. It gives time for SoFi to actually recover here. But for me, I kind of want to be getting assigned right now. I'm not going to lie to you. Like, I kind of want to start getting assigned a little bit because me personally, this guy random guy on the internet, I do believe that SoFi is going to have a nice bounce here. May see a little bit of red still, but I don't think we're going to drop that much further down before we see a nice recovery. To me, it screams opportunity. So whether I get assigned or not, I'm just going to collect some premium along the way and open up some puts, especially at those key support and resistance levels, right? So how do I do that? Well, with Ark Picks, this is the tool that I primarily use now because it makes my life tremendously easier as somebody who's busy and has better things to do than sit in front of charts all day. I always look at the technicals after I believe in the fundamentals. Listen, so many people love to trade the technicals because it's fun. We draw on the candlesticks. We call them the Picassos. I don't draw shit, right? All I literally do is look at the technicals, right? I literally look at the technicals. The technicals I care about, what's the current price of the stock? What's my RSI at? How are the Bollinger Bands looking, right? And then my 50-day, 200-day, 30-day, and then obviously making sure there's good volume on it, where obviously SoFi does, right? And then I compare my 50-day, 200-day, 300-day to the current stock price, right? So right now, we are at that 200-day, right at that 200-day moving average. When I sell puts, in a perfect world, I would love to always sell puts below my key 200- and 300-day moving averages. Not necessarily always possible. Possible now to be below the 200-day moving average on SoFi because we're trading at 22.81, but our 300-day moving average of 19, right? If I look at the 19s, there's no juice really there. There's really not, unless we continue to drop a little bit for $15, on locking up $1,900. Not necessarily worth it to me. Maybe worth it to you. Obviously, go do your own research. But if I really wanted to be closer to that moving average or to the 300-day, I would go out a little bit further. I just would, and I do that sometimes, depending if I have a little bit of collateral. Again, with SoFi, I like to primarily do weeklies with SoFi or like bi-weekly kind of stuff. I don't really do much, 30 plus days out with it. But if I really want to be next to that 300-day moving average to give myself that cushion, right, I will then go further out, right? So here, the 19s, you could see I'm only collecting here, about $30 of premium. So we'll just put $30 of premium. We're locking up $1,900 here. Only a 1.58% return on our money here. However, you have the security of being below the 300-day moving average, right? That's kind of the way the risk you have to be. For me, the way I'm playing SoFi right now is if I can be getting assigned below the 200-day moving average and close enough to the 300, I'm going to be happy for the most part because I'm very bullish on SoFi long term, and I'm even considering doing a buy right. So if you don't know what a buy right is, essentially I literally just go to SoFi, right, whatever brokerage. I primarily use Fidelity here on the channel. I do showcase Robinhood because it's like way easier to showcase it. I know most people on here are beginners and getting started with this stuff, so it's easier to kind of visually see. And then also Robinhood is going to be doing interest on collateral soon, so that's another great incentive to use Robinhood. That's coming in March. So great news. May start to do some more stuff with Robinhood here in the future. But basically a buy right is this. All I'm doing is buying 100 shares of SoFi because I love the price of it currently, right? And then I simply sell my covered calls immediately with it, right? So in this case, let's say I bought SoFi at 22.78. I bought 100 shares at 22.78, 22.80, whatever. I immediately flip from selling puts to potentially get assigned while getting premium is I sell a call where I immediately flip that asset to start making it work for me. Now these premiums are going to be nice, right? So let's say I'm buying at 22.81. I can immediately start selling covered calls for 24.50 for about 2 weeks away. You can even do the weeklies as well if you want to, or you can even go to monthlies. I do like monthlies for covered calls on dividend payers. That's my primary strategy, which I like to call the Ark Options Strategy, is I like to do dividend paying stocks, collecting that premium plus collecting the dividends. But I go way into that in the Ark Options Strategy workshop. So click that first link in the description of today's video. At the end of that training, I'm going to give you all my premium calculators here, no strings attached, they're free, as well as my full trade log template that keeps yourself nice and organized, because your brokerage ain't tracking this stuff correctly at all. So click that first link in the description of today's video, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.